All right, welcome back to Good Morning San Diego. The United States federal debt is growing faster than the economy, which is why interest rates may stay high. Here to tell us more is the president and CEO of Wilsey Asset Management, Brent Wilsey. So I feel like we've said this before, but guess what? Interest rates are staying high. Tell me what this means and why you're seeing this.
Yeah, well, this is so important for people because you want to buy a home, you want to buy a car, you want to get a credit card. I mean, all these things affect interest rates, and also too for investors, very important because you think, okay, well, this is going to be good, and then rates don't go down, you kind of panic and do the wrong things. So what we want to talk about, and I do want to mention the inflation report because that is one thing that drives it. Last week inflation came out, was 3.4%, down slightly from 3.5, still off from the 2% target rate, but it's not terrible, but it's not great either. And these are things that you look at for interest rates. And when we look at the U.S. federal debt, I mean, it's $40 trillion. I mean, it's 120% of GDP. I do mention that Japan did get to like 180%. Their economy didn't collapse, but it didn't do well either. So we do have to try to fix this going forward. And what I try to tell people is that historically, we're at high levels and we have no wars, no emergencies, nothing. And this is a problem because we have a good economy with high debt. What happens when the economy slows down? You still have this high debt, which could go even higher. That's one of the problems.
And so what do you recommend to people? What should they be doing because of these high rates? You say, hey, keep going with what you were going to do already.
Right. Like for instance, you're going to buy a house, all right? Don't wait for the rates to come down because they may not. In the meantime, you miss that house. And again, I'm not talking about flipping a house. I'm not talking about trying to make a quick buck. I'm saying you want to get a nice home for your family, to live in a nice neighborhood. Buy the home that you can afford and realize you may do more. If rates do come down, you can refinance, but don't wait for the lower rates before you buy. Same thing with remodel. If you need to do that remodel, do the remodel. Don't wait for rates to come down because there's just so many reasons why rates won't come down. Again, we're talking about inflation. Again, I mean, the annual deficits of the government, they're exceeding the GDP by 5%. The problem we have is that debt is going to be increasing, not decreasing. And the bigger demand for the debt, the less likely it's going to fall because of supply-demand issues. Higher demand, lower supply, and when you get more debt, raise interest rates, and that's a problem for people.
Okay, what do you see as far as the stock market is concerned when you do have these higher interest rates? Does that affect anything when you're talking about your individual investing?
It can. I mean, we all know about AI. Everybody talks about AI. Well, they are borrowing billions and billions of dollars. They're issuing billions and billions of dollars of capital. Not everyone's going to win in this race. Same thing happened with the internet. They way overbuilt fiber optics. You can't keep doing that with AI. So they're trying to borrow money. They're competing now with the federal government to build these data centers for debt. So this big debt bubble is starting to form here. And companies are going to have problems where they're going to probably default on the debt. Private debt's another one. They're starting to have problems. So there's so much problems developing with debt. You just can't be looking at saying, I'm going to buy the hot thing. There's still a few buys out there. I saw a gentleman before I came in here, and he goes, what do I do with $50,000? I go, well, be patient, because that's what I tell people when they come to us. Like, we're not going to invest all your money right now. We're investing maybe 30% of it, because a big part of investing is understanding what you're paying for something and being patient to wait for things to go on sale, not just buy the hottest thing right now. That never works with investing. So be patient. Patience is so important, I think, just in life in general, isn't it?
Yeah. I mean, you've got kids.
Yeah,
exactly. Yeah. All right. Well, Brent Wilsey, thank you so much for
You're
coming
welcome.
in, sharing your insight. We appreciate it, as always.
All right.